To be honest, Michael, I can hardly remember a time which has been that complex, that challenging, and also that volatile that it is right now. Whatever this government is now doing, it always needs to put the economy first, because if you put the economy first, it's actually good for democracy, and that is the most important. Deutsche Bank is a global bank. We have the global expertise, and in particular the local expertise in the global markets, which is fantastic.
It was one of the most closely followed elections in decades in Germany. The political centre crumbled as the far-right Alternative for Germany, or AfD, doubled its share of the vote and came in second. Now, as the conservative Christian Democrats hurry to form a coalition with the Social Democrats of the centre-left, Germany and Europe are at a crossroads. Welcome to This is Deutsche Bank, a podcast looking at news and trends in and around banking and finance. My name is Michael Steen, and in this, our very first episode, we wanted to take a closer look at the fallout from the election in our home market. Today is March the 5th, and I'm very happy to be joined by Christian Sewing, our CEO, to get his insights on a dramatic fortnight, both here in Germany and around the world. Christian, thanks so much for being here for this first episode.
Thank you for having me.
Okay, well, let's get started. There was a lot at stake before and after this election. The economy was been stagnating, and tariff threats and geopolitical turmoil are hardly good for the German export model. So with that in mind, what does the outcome mean for Germany and also its society?
Well, first of all, there is still a lot at stake, actually. We are, I think, in a very critical environment, geopolitically, economically, from a society point of view, from a geographic point of view. So, to be honest, Michael, I can hardly remember a time which has been that complex, that challenging, and also that volatile that it is right now. And in this regard, I have to say I'm glad that we have the opportunity with the results of the election to have a coalition which consists of the two big and historically the leading parties in Germany, who in my view can make a huge difference also to the fate of Germany. We need a government which is stable, which is clear about its reforms, and which is, so to say, very much driven by, on the one hand, the geopolitical challenges we have in this world, and we need clear answers to that. And that can not only be a German answer, it needs to be a European answer. But at the same time, this government needs to, again, focus on economic topics, because clearly we have seen difficulties and we have seen also misses in Germany, which we need to repair. And I do think whatever this government is now doing, it always needs to put the economy first, because if you put the economy first, it's actually good for democracy, and that is the most important.
Okay, and talking about the economy, we just had a hugely significant announcement by those two parties just last night as we record. They are agreeing to reform the so-called debt brake, which is constitutionally limits the government's spending, and they're setting up a 500 billion euro infrastructure fund. Is that the kind of step that we need to be seeing to get the German economy going again right now, would you say?
It would not be sufficient if this is the only step. And therefore, let me put it different. We always ask for structural reforms in Germany, and that remains the most important. We need structural reforms when it comes to bureaucracy, when it comes to regulation. We need to think about what can we do about energy prices in Germany going forward. You need to think about the mid-cap companies, the family-owned companies, the manufacturing part of the industry. We need to have competitive energy prices. We need to think about the lack of skilled workers. That is all translated into a structured migration and immigration environment. We need to think about defense, but not only defense in terms of what is happening in this world. Defense can be a huge impulse, positive impulse for the economy, actually, because defense and technology is very much linked. So I gave, I think, at the end of November to one of the German media houses a 9-point program which Germany needs from a structural reforms. And these structural reforms remain most important in order to avoid that Germany becomes the sick man in Europe. So that is number one. Number two, I still do believe that also from a budget point of view, we really need to review in Germany our income and expenses, like you have to do it with each and every corporate, which is in, some challenges or in some difficulties. And therefore, I do believe the new government needs to take a very close look for what are we doing our expenses. Is there room for certain cuts, and can we reinvest that into yielding investments in terms of growing the economy? We need to grow the economy on average above 2% in order to pay for our pensions long term. So it's all about also getting the budget right. Thirdly, we need to actually invest into Europe. I think in particular in this geopolitical environment where we are, Germany on its own, even if we would do super well, we are not strong enough actually to compete with the other nations and the other countries which are bigger than us. Not only talking about the US, but I'm talking about China, India, other blocks in this world. And therefore, I think Europe is the answer. And in this regard, obviously coming from a financial institution, the Capital Markets Union is the key answer in order to actually invest and allow investments into Germany. Now, if all this is done, actually what we heard yesterday is, in my view, a positive and a right step. And I do believe if these investments are really used to make us safer, to actually invest into defense, and again, don't forget the positive impact on technology. Defense and technology is really linked. If we invest into infrastructure, I do think, also from a debt capacity point of view, it is the right direction. But it would go nowhere if we are not working on structural reforms. And therefore, I hope that while I support directionally wise what happened yesterday, I hope that we are not forgetting about the economic reforms. That is most important.
Okay. Now, you've already mentioned it, the volatile environment we're in, and you mentioned other countries, including the US. And one of the very first challenges faced by the likely next chancellor, Friedrich Merz, was immediately after that was what to do in the face of this harsh new tone that we're hearing from Washington. Most recently putting support for Ukraine into question, but also repeatedly threatening tariffs, which is again an economic issue. What do you make of this, and what should the approach be here?
Look, first of all, I think we really all have to realize that there is not only a new tone coming from the US, but it's a different policy, and I'm not now judging on it whether right or wrong, but I think we all have to wake up that this is not a phenomenon which is only there in January, February, and March, and all gets hunky-dory again in April, May, or June. I really do believe that we will see a longer-term different economic and also geopolitical policy out of the US. And I'm sure, to be honest, my reading of all of that is that the US is, first of all, focusing on itself. America first is, for them, America first. And secondly, I do believe that the focus of the US long-term is actually more Asia-Pacific oriented than Europe. And the reason is that if you think about demographies, if you think about growth rates, if you think about resources, if you think about topics like technology, the fastest growing sector in the economy, there are opportunities in Asia, in the Asia-Pacific region, which are hard to discuss. And therefore, the focus of the Trump administration is going into this. And that means that we obviously, again, need to focus and need to find the right answers. What are the right answers? Work on your own economy. Make yourself stronger, and not in a confrontational way, not at all. I think most important is that we keep in dialogue with the US, with other partners we have. But even if you keep the dialogue, and there are, by the way, items where I understand the criticism of the US versus Europe and Germany. If you think about defense expensive, there is no reason that we didn't spend as much as we should have. And therefore, I think it's an argument which is valid. But in order to, and therefore we need to keep the dialogue, we need to think about where we can also agree on certain deals, so to say, if I use the US language in these days. And I'm sure there are ways to find that. But you always have better cards in politics, privately, but also professionally, if you are yourself strong. And therefore, we need to work first on ourselves. And therefore, my plea for structural reforms, and not only for the increase in debt capacity, but also the big plea is that we think about a common Europe. What can we do together in Europe? Europe is a continent with 450 million consumers in the EU. We can be super strong, 450 million, compare that to the US consumers. And if we find common grounds, and I do think there is a window of opportunity also with the new EU Commission, I think we are a very competitive partner, and that will also get a positive feedback in this world, I'm sure.
So I'm hearing some optimism there. So in other words, there's some sort of opportunity as well in what some might be seeing as a crisis or a turning
definitely
point.
And definitely and therefore again, I mean, if you are in a difficult position, you need to define yourself a way out of this position. To be honest, the feedback on Europe, the feedback on Germany, is not at all only bad. If I'm traveling the world, and whether I'm in Asia, the Middle East, or in the US, there is a lot of good feedback on Europe, on Germany, in particular micro. And when I talk micro, it's the companies we have, the excellence we have, the talent we have, the technology we have, the manufacturing we have. People are always talking about artificial intelligence. Yes, very important. There is artificial intelligence, actually, which we can use for our industries, i.e. industrial AI. We are one of the leaders. We have fantastic companies in Germany on DAX level, on family-owned level, where this is already applied. So I think people actually see the benefits of Europe if we are now working on the structural reforms. And never forget what counts for our clients, what we tell our clients, private clients, commercial, corporate clients, about diversification. Each investor is thinking about that. No investor of this world likes to have all eggs in one pocket, and therefore they would like to have a strong Europe. And hence, there is a window of opportunity, yes.
Okay, and you've already mentioned the idea of the capital markets union, pooling all the capital markets in Europe to make it more attractive for investors. But turning the conversation a bit towards ourselves and banks, and particularly Deutsche Bank, what's the role that we should be playing here?
Well, I think we can play multiple roles in this, and it would take too long for this podcast. But number one, to our clients, in my view, a most critical role, that in these times where we are with these volatilities which we see in the market, but also from a geopolitical point of view, the advisory needs for our clients is as big and as high as I haven't seen it before. And actually, the clients are looking for a bank with its home market in Europe and in Germany, but with an international and global reach. And there are not so many European banks left with the network we have. And to be honest, we can see that in our mandates, we can see that in our client feedback, that is wanted. When I'm in the US, when I'm in Asia, a lot of clients are actually telling me, to be honest, we are looking for the one European alternative to the US banks, because also we would like to diversify. We have fantastic US banks, there is no doubt, but they would like to have European alternatives. We can be that European alternative. That's the reason why, with all the transformation we have done, one thing was never at question, that we are not remaining global. Deutsche Bank is a global bank. We have the global expertise, and in particular the local expertise in the global markets, which is fantastic. We have the risk management tool, so I think we can be the advisor to our clients. I also do believe that in these times where we are, if we think about the geopolitical shifts, I think it is very important that we have a capital markets bank in Europe, because everything what we are discussing, you just talked about the capital markets union. In order to make a capital markets union happen, you need to have European capital markets banks. There are not a lot of banks with an investment banking network like we have. So we can be a facilitator, actually, of the European capital markets union. And to be honest, I also do believe with the transformation which we have seen, with the return to a real credible bank like we are, we also have a chance to be actually also an advisor to other stakeholders, and really be not only an advisor, but we can give, in my view, good input from a research point of view, but also from a markets point of view to stakeholders in Brussels, in Berlin. And I can see that this is picking up, and therefore I can see that we are playing a major role actually, and can play a major role. And this is exactly what at the end of the day is so interesting.
Okay, so I think a lot of what you're talking about is also captured by this idea of global house bank, which I'd love you to sort of tease out a little bit more. Maybe it's the heart of the strategy. You've been CEO for nearly 7 years, and you congratulations.
Just recounting, not yet, right?
No, nearly, I said nearly.
Really?
But so you very much pivoted the bank back to its roots 150 years ago. It was set up to advise German companies abroad. I think you would probably agree we now advise companies from all around the world. But that sort of corporate advice is part of the center. Of course, in Germany, you've got a huge retail network. And we've got the investment bank, as you've been talking about, with, of course, asset management as the fourth part of the bank. That all comes together in this idea of global house bank. The question is, at exactly this time when we see globalization going into reverse, does that not challenge that strategy, or do you see it differently?
No, it does not at all. And I would counter and also I'm not fully agreeing to the word reverse of globalization. I think the globalization in the future looks simply different. I have hardly seen companies in Europe, in Germany, but also across the world who are stopping investments outside their country. Everybody would like to have access to the consumers around the world. Now you need to do it differently from a supply chain point of view, from the political developments which we have seen. And for that, Michael, you need a bank with the local network. If you want to have direction and clear strategies in this world, it is actually good to have a bank which is active in around 60 countries in this world, with local expertise, with local stakeholder knowledge. That's what we can do. That's where we are. What I always describe in one sentence is actually, I want to make sure, by the way, not only for our corporate clients, but also for our institutional clients and for our private clients, I want to be the first call partner the clients think about if they think about financial transactions, financial questions, because we can give them the local advice, and at the same time, we can give them global reach. And that, I think, in these times where you have so many different movements around the world, having one bank being at the center of everything, and we can tell you from our day-to-day on-site experience what is happening in South America, how Mexico is actually now reacting to the tariff discussion, how Canada is reacting to that, what is happening on the other hand in Asia, what kind of opportunities they see. We are never talking about the biggest increase in trade flows between the Middle East and Asia, where Deutsche Bank is in the middle of it. We can tell our clients that. So whatever question comes, I want to be the first partner who gets the call. And then our people need to be there in order to provide the financial security, but also the long-term success to our clients. That is our purpose, and that's what we want to do at home and abroad. And therefore, I think in this world where there are so many questions, having one global house bank, which is at home here, but also abroad, is fantastic.
Okay. Turning to the future a little bit, you teased at the presentation of the full year results for 2024 that you've been thinking about this idea of Deutsche Bank 3.0. So whilst we got you here, I'd love to know, can you tell us a bit more? What does that mean?
Well, I could tell you a little bit more, but I'm not doing it because we are obviously elaborating on that and working on the next level of Deutsche Bank, because I'm very happy and proud of what the organization has done. We were not in such an easy position in 2018. I think the bank is robustly turned around. We are sustainable, profitable, but we also have to say that we are not yet there from a profitability point of view where we could be. I'm always saying internally, it's like in sports. I think we are We are playing at 65% of our capacity, so the next 35% needs to come. And the next 35% is covered by Deutsche Bank 3.0. And 3.0 or 3.0 is all about three items. Number one, we are now in the position that I think we have a clear strategy. We have a very, very solid balance sheet. We have completely repaired our reputation, and now we can grow. But we need to smartly grow, and that means we need to allocate the capital there where we can make the best out of it for our clients and for ourselves. Capital allocation driven by shareholder value add, that we are really measuring the allocation of the capital in a disciplined way, is something which can really lift the bank from one level to the next level. And that is one. Number two, you always need to structure a bank to kind of the level and situation in which it is. And we were in a quite challenging situation 4 or 5 years ago, or 6 years ago. And look, we centralized a lot of decisions at that point in time. That also means that, yes, we had more control, but at the same time, you are slower. You are not that streamlined. And this is exactly where, in a second point now, we want to change the target operating model of the bank. We want to give more responsibility and accountability to the front office. We have now the risk culture. We have the right people in the front office. I can see how they live the values, the dedication of the bank every day. I can see that we have the right people there. And that means we should move more decision-making to the front. It makes the bank faster, quicker, better for the clients. It's all about increasing the client experience. And that coupled with the third point, which is a constant improvement in leadership of the bank. We can all learn. Leadership is all about learning. I think with This is DB, this is Deutsche Bank, we have a framework developed which is fantastic, from purpose, strategy, vision, cultural values, and then the claim for Deutsche Bank, which should really get into the minds of our 90,000 employees. If we do this and further improve on those values, to be honest, well, I think there is not a lot which stands in the way to be the European champion.
Okay, and one thing you mentioned there is leadership, and I think what's fascinating about you is you actually started your career at Deutsche Bank. I have to ask, did you at any point think, I need to explore something else? I mean, I know you had a brief interlude, but it's a fascinating side of your CV.
No, not really. I mean, yes, as you were saying, I went for 2 years somewhere else to another bank in Germany. And honestly, I learned a hell of a lot during these 2 years. I'm very grateful and thankful for that experience. Being a board member at quite a young age, learned really a lot. But look, at the end of the day, I have a passion and dedication for this bank, which is really strong, to put it mildly. I think this bank has so much in it. The bank gave me so much in terms of training, education, experience. I mean, I spent time in I don't know. I mean, I went to Toronto, to Tokyo, to Singapore. I spent 9 years in London. I really learned the bank, so to say, bottom up. I had the chance to learn. I had the chance to learn from more senior people. And then I grabbed my opportunity and I grabbed my chance. But it's such a wonderful institution in terms of clients, in terms of our people. It is an institution which really wants to win, and where I see a lot of dedicated people, and I can see more and more that this dedication, this positive spirit, this positive passion is taking day by day more and more speed. And therefore, to be honest, I can't think about a better employer than Deutsche Bank.
Okay. You've mentioned dedication several times, and you also mentioned the claim, which is with deep dedication. We've named the podcast This is Deutsche Bank. This leads to the final question, which we want to make a running one, which is, what is the one thing that you're deeply dedicated to in your daily life?
Well, it's very hard, the one thing. Number one, I really do believe that I'm very dedicated to improving the performance of Deutsche Bank day by day. And don't get me wrong. I mean, I obviously, I'm also looking at our share price. I want to be competitive. But I'm really deeply, deeply dedicated to make this bank a better bank for our clients and for our people. And that is, if we have a bad day, I'm always thinking about what does it mean to our franchise? What does it mean to our people? I do believe at the end of the day, we are a people's business. If we achieve that, what I said at my first AGM, that I want that the people are again very proud to work for Deutsche Bank, that will have a super positive impact on the way we are treating our clients, we are serving our clients. That's what I want to achieve. So I'm really dedicated to the qualitative performance of this bank. If this is going into the right direction, unfortunately it does, then honestly the financial success will come automatically. And in this regard, we also should always plan long-term. I think being only short-term is wrong. We have a long-term strategy, but the dedication for improving the qualitative performance is something which I would rate very high.
Christian, thanks so much for being with us today.
Thank you.
And thank you for tuning in to This is Deutsche Bank. If you enjoyed what you heard, please do subscribe here or leave us a comment down here and let us know what you'd like us to cover in any future episodes. We'll be back next month. In the meantime, take care und bis bald.